Landed on my seas, I ain't seen it grow. It's not about what you see, yeah, it's more about what you know. For the yola like a tree, ready to agree, but it's the grows. If you tryna talk to me, then you gotta jump. How you talking?
All right, ladies and gentlemen, I got your watches coming in February 24, 2020, and the stock market is going to go crazy this week. There is a bunch of stuff we need to talk about, especially what happened Friday, down Monday. I want to talk a little bit more about this. We're going to see how tomorrow plays out, but I also have a play of the week for you. It's another one of the earnings plays, so hopefully you guys are going to be there live or you follow along through here. This is now a play we're going to set up. It doesn't mean it's going to play out like the NVIDIA, but we're going to keep our eye out for it, hopefully, and there's also some continuations and a bunch of other plays I actually made on Friday. Even a fat finger trade. I accidentally put down $2,000 on a trade. I only meant to do 1,000. I only put 1,000 because you guys got 1,000 likes on the live stream in the first 30 minutes, so it was a mess, but we need to talk about all that. So I got the keys for you. I got the plays we made on Friday. I got the plays I'm looking at even tomorrow, and just everything else that we need to be focusing on. So drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. You can watch all of these plays live, the logic live, see this happen live. It costs you nothing. All we ask is you're positive and respectful. So tune in there, youtube.com/thestockmarket. And do not forget the most important thing you need to do. Post your watches below. Let us know what you're looking at. You got any plays, comments, remixes? Are you going to play this play? You have any better ideas? You found a better option? You guys are actually good at finding some options that I missed, so call them out there. Post them below. Let's source that info, baby. And post a specific play. We do this every single Monday. This is a separate portfolio. I put $500 into it, and the whole point is here, we wanted to highlight the performances if you copied random trades on YouTube and what would happen. So every single one of these plays, every single Sunday on this watch list, you guys post a play. When Monday comes out, I do a random comment generator live. I select one of the options from the comments and I buy it indiscriminately. Put $100 towards it. I go with the play, and I still haven't sold out yet, and I need to, but take a look. This is our fourth week we've been on. We have 4 plays and we are up $26. It's working. So shout out to Colt, baby. We'd love for you to participate though. Give us some more data. And again, this is an experiment, so do not copy these trades. Be careful. Anything even in this video, please understand too. Option trading is extremely risky. You can't lose all time with financial advice. Please use all financial advice. Educational purpose only. Thank you. So let's have some fun though. Post it and let's get into it. So right off the bat, what I'm looking for is a down Friday, down Monday. So if tomorrow closes red again, we are coming off of 2 pretty decent sized red days. Again, it was pretty surprising on Thursday. If you didn't check that video out over the weekend I posted, please check it out. There is a big relation here with the Japanese yen and just some of the stuff going on right now that could help explain some of these moves. You guys have been watching us. Keep an eye out for oil and all that. All of that is important. But now, considering how we've moved with the coronavirus ever since, about 2 weeks ago, we've shooken off everything and we haven't really seen one of these down Friday, down Mondays too often. And then even when we have seen a down Friday, down Monday, nothing really happened. So this is where I think tomorrow is important, is that this could probably be this week, that if we do get a down Friday, if we do close down tomorrow, that will be a down Friday, down Monday. If you're not familiar, that's like a technical indicator, but it pretty much says when you have people exiting the market on Friday before the weekend and then first thing when the market opens, that's not typically a good sign. But it usually even signals tops or bottom, so keep that in mind. It's a double-edged sword indicator, but we want to see if this is a reaction, and if not, watch the factors to bring the market up. And now, if anything, we are seeing the coronavirus concerns come back to life. It's now spreading in South Korea, just like the early stages it did in China now, where after about a few weeks, it's pretty much went from 5 people to like 500 people. And now Italy is on a state of emergency. People are getting a little bit more concerned now. So this could be the second wave. And I really think either this week, if not coming into next week, early March, we might see that. So keep an eye out for that, and also how the market responds to some of the other factors we're going to discuss. But I posted that video the other day, and a lot of people, they said the market's been up, it has to come down. There says there doesn't have to be an explanation. And although that holds some truth, the thing is I'm pointing out yearly historical trends that have broken, especially with the yen, where we're talking first time in 5, 10, 20 years where some of this stuff occurred. it shouldn't always happen like that. So we need to ask ourselves why. But if you would like to view the market in a very neutral way to really understand what's happening, I heard this here today from a few fund managers. It was posted online that the market is showing that investors are maintaining exposure. That's why the market's high. That's why the market's making quick bounces, but they're minimizing the stop losses. They're tightening up that range. So this is what's explaining the moves at the very best, I would say, where you're seeing there's risk on the table, there's stuff with the virus, all that, but people aren't scared to expose themselves to get in on it, but they're very, very reactive right now. So that could even contribute to a lot of volatility we're seeing. So keep that in mind. But beyond that, we have a big earnings week. I know you guys are going to hate me, but I even checked Earnings Whisper. Every week, it just looks smaller and smaller. However, I still think this is going to be a big week. I still know we're going to have a couple hundred companies reporting, but you're also going to get some bigger name companies that have a bigger effect on the Dow. So I'm going to keep my eye out for that, and I even have a play we should set up for there. If anything, some of these earnings could act as a buffer for markets, especially, Home Depot is going to be one of them. We want to see how this could change, any rotations and anything like that. But finally, coming into all of this, watch the pop-off indicators that we talked about last week. One of the plays I made yesterday, I have a lot of TLT plays, and I like TLT. I like where the bonds are at here, and I see a specific opportunity. The only thing that will kill us will be time, because the bonds are going to pop off. It's just a matter of when. But watch the bonds. Watch the price of the dollar, specifically if the dollar strengthens. Watch out for the yuan to weaken and how Shanghai does, but now also watch the yen. This one is probably sticking out to me as one of the biggest ones that was a low-key surpriser. But also, don't forget about oil, but it looks like the dollar is going to be the leading indicator. That's what I'm coming to. So watch any of these indicators. If there is any big moves or big data, watch out for that, and then watch out for how long it takes for the market to digest it. So that is pretty much it. So let us get into the plays. So I'll go over the main play of the week so far, but a secondary one that I'm going to be looking at is going to be Palo Alto. They report tomorrow after hours, so this could be one that we might be able to flip in the morning. The thing is, though, they kind of had a few bad down days, so this could start to mess up the volatility and the pricing in before earnings, if you guys are familiar. But keep an eye on that. Be on stream. I'm going to gauge this one in the morning and see if we would be able to pull off a flip on it. If anything, we might, and just keep it small. So watch out for Palo Alto. Big spreads too, so keep that in mind. But there's also going to be Keys tomorrow after hours, and also Tandem. If you guys have any other earning plays, call them out, but I'm going to be watching those. And then on the morning Tuesday, we're going to get HD and Macy's. And I think those could be the biggest ones, especially HD. I just don't know how I'm going to set up for it. But keep that in mind. Those are going to be Tuesday morning. And then do not forget about the Beyond play from last week. That is our play of the week, ladies and gentlemen. So this is the Beyond play that we got last week. We have the March 20th 250 calls. I have 10 of them at 77 cents. They're now worth about 64 cents at the midpoint. We are down $130 on them. So we have to wait to see how this plays out, because I think they report on Thursday. The question is, do we average down early or later? And pretty much any market forces, any negative market action could derail this play. That's what we saw with Apple and AMD. So keep that in mind when you saw that. So we have to be conservative here. I already put 700, which is decent. But if anything, what I would want to do throughout this week, I'm going to look to throw maybe like $1,400, $1,500 on it, raise the position greatly. And then hopefully, as the IV kicks in, I'm going to try to sell my initial investment back and keep as many as I can, at least a few, like $200-$300 for free. That is the main strategy that I'm trying to do, just like we did the Nvidias. So this is the first one. I am worried it's super far out the money, and that's what happens here, is that when it comes to playing the IV run-up, this has more IV, but now as it comes to earnings, if the stock stops moving or the demand stops coming in and people aren't really buying any of the contracts, what's going to happen? These ones might get some IV closer to the money, but the ones out of the money are very susceptible to lose. So my key coming into this next week is, do I average down and buy that $1,400 on these, or do we find an opportunity to get a little closer to the money, like 190, 180? And now, shout out Foco, shout out all the people who've been keeping this up, man. Eagle Eye Killer, Foco Web Design, shout out that. This isn't a promotion, but shout out our people, man. I love the Colt. He brought up a good point. There's Marches and even, I believe, May debit spreads that are a lot closer in the 180, 190 range, with the $5 difference that you could get for 30 cents. Those are still a very viable option, but here is the logic of the play that I'm trying to do. Here's how I think I'm going to make money on it. I do think Beyond Meat can do good. I think Beyond Meat can rip up for sure. It could also go bad. That's the whole point of earnings and surprises. But what I am looking for here is that I do think IV will run up into it, and I want to take advantage of the IV and the prices coming into earnings to be able to get a play where we could get it for free, and I'd be willing to let profit ride for earnings on the upside if it does go through. Did not acquire any puts. I will decide to do that depending on the balances. So if the play goes up a lot and I make a lot of money, we have have a good profit and it would make sense to put out 50, 100 bucks on a put, I'll do it. But if we barely get anything out of there, we're coming into a loss, I do want to minimize the amount of money I put in. So if I can make the trade free, I don't necessarily need to go both ways. That is the first one. The next one, like I said, I'm going to be going after Palo Alto Networks. I want to see if we could flip that. But the next, I guess, secondary play of the week is TLT. So we have a few of them. One, our Aprils are killing it. So if you guys remember that, we've been talking about that all last week. We got those about now 2 weeks ago. The 170s are doing great. We bought these at 7 cents. They even went up to 18 cents at one point. I was going to ghetto spread them there, or I was going to sell out half, but here was the point, and this is what I'll tell you guys. If you're going to ghetto spread, or if you're going to sell half of them, or try to take any profits, you can't buy this back at least until the prices get cheaper. That's the whole idea here, is that I was like, well, I want to take some profits. I want to ghetto spread it, cut the position. But if I'm just going to buy more TLT, I really like the TLT play. I like the fact of what bonds are doing. It wouldn't make sense for me to give up my 7-cent entry price, take profits just for me to buy more expensive contracts with shorter time or more time. And I could have just held this and just let this one ride. So keep that in mind and balance the books, but also try to, factor your next 2 or 3 steps. And don't sell something unless you have a plan of what you're going to do with the money. And don't sell something if you're going to go back into it with premium just to get less for your dollar. So you got to watch that, but I'm still holding 75 of those contracts. They're carrying values about $975. We paid $570. If I can get them for free, I'm going to try to do that, but I do want to let those kind of marinate a little bit. I do like where bonds are at. But be careful, TLT out of nowhere can always just drop off and you'll lose a lot of money. So I am also going to even consider TLT puts, but we have that one. Now, this was the play I made. I put $1,000 into it, and then Robinhood screwed me over. I did a fat finger on it because the order didn't cancel, so I ended up getting 90 of these. I was only supposed to get like 40 of them, but I did a debit spread for March. So we got the 155, 157 call debit spread. You buy the 155 contracts, you short the 157, $2 difference between, so it has a $200 profit per contract, and it costs us $20. So it's about 1,000% debit spread. So $20 to 200 is $200, but then we bought a lot of them. So a total cost right now that I paid was like $1,800. Now they're worth $1,602. I'm down $200. Max gain would be like $20,000 in this case. But I'm gonna look to try to cut half of those because again, I didn't mean to do that, but I'm still gonna hold that position and see. But I did this one a little different. Notice the other TLTs are really far out the money, and then we did grab another pair, and we grabbed these on Friday. We grabbed February 28 151 50s, and we bought these at 26 cents. So these are up right now at 35 cents. They went up a little bit. I only bought 4 of them, spent $100 or so, 104. Now they're worth like 140, so I'm keeping that, but I'm trying to get close to the money. Then with those Marches, we're kind of middle in the money. Again, we could get a lot closer, but the idea with this play is that I put a lot of money on it. All of the other TLTs are inflated. That's what sucked about it. On that, I wanted more TLT, but everything was so expensive. But these are in the midpoint. These are still within a standard deviation, or 1.5 barely. But this is how you see I'm scattering them. I'm getting longer term time, like way out the money. Then I'm trying to get stuff in the middle, and then I'm trying to get some shorter terms as the shorter terms get cheaper to get right in the money if and when the TLTs pop off and start going crazy. So there's that play, there's the Beyond, and then finally the other plays I'm going to be looking at, I grabbed this one on Friday as well too, is the Rokus. So again, 120 is the danger zone. They started falling below that. I think this could be really, really bad, especially if the market goes off. So I should have got a little bit more time, but this is going to give us some flexibility to make some moves with it. But I got the February 28th 108 put, 104 put, but we bought this at 50 cents, and some people got shooken out of this. Again, that's why control the budget, go small. If you don't want to spend 50, maybe go down a little bit lower, but if that's too far at the money, wait till the stock moves, depreciates, and then find something closer to the money at your budget. But we bought them, then they shot down in value, then they shot back up. They were up almost 100%, and then they kind of came back. So you could see it's very volatile. That's what happens with a momentum stock like Roku. So I like this play. I'm going to keep my eyes on it, but again, I'm a lot smaller because only catalyst is it breaking that key 120 level, whereas TLT has a catalyst being at the historic bond levels and where it's at. Palo Alto would be an earnings play, and same thing with Beyond. We got to move cautiously in this market. I'm trying to act off of, double win-win scenarios where we could play a stock, but it has more of a stronger thesis behind it, like the earnings and all that. But in this case, Roku is just breaking a support level, so it's at the mercy of a few other factors. And then finally, again, all these plays, hopefully if you guys have been watching the watch list, shout out all my watch list watchers. I love you all. Shout out to Cole BB. I said Boeing. I've been waiting for this. I finally bit the bullet on Friday. I took this one again, another weekly so that's why I've been trying to I spent a decent amount, but they don't have as much time, but at least this is a full week. So again, though, like I said, a week ago, you're going to start getting better deals in the March 20th contracts and even down to the Aprils, because well, a month has gone by, and then, contracts hit this point and they really start to depreciate. So these worry me. I'm going to try to ghetto spread this in the Roku or get them free as best as possible. But I got a 285 put, so I think this one's about 2.5 standard deviations outside the money. Oh, wait, no, never mind. Thank God. No, I got the March 20th. Yeah, okay, see? I was like, why did I get another weekly? But we still kept it full. I got the 285, so it's decent, but we got this one for 62 cents. You see it's at 65 to 77, but I want some exposure if Boeing does come out. Some news did come out on them over the weekend, but this is a key level you could see here. So this is them breaking support, and if things get a little bit more negative with their story, that should be a good one. So I like Boeing, and those are all the other plays we made. As far as what to watch now, watch Microsoft. Those puts we got in March, those went up 50% if you guys remember that. So I'm still holding one of those. I like that, but the puts now with March are going to start getting expensive, but watch if those get cheap. But now too, depending on what happens, this could get set up now a decent dip buy if we want it. Remember, I wanted to play both ways. I still haven't got those calls yet. I've just been holding the puts. Those are up now 50%. We can see how we can finesse the upside, but I still do like Microsoft in terms of the downside of how much meat it has to offer. And then I also like it if it bounces, simply because it has been a market leader and it's been doing a lot better than some of the other companies. So watch Boeing. Oh, I forgot. Watch eBay. We did make a play on this. They got a secondary, another rumor came out about them getting bought out. So they did a little bit good here. The fact they held 38 is good. We have those old contracts that went up and then we added more. So watch that. Don't get too crazy though. IV is going to be a real killer there. Watch TLT. Still my favorite play. Again, I just like when TLT goes in this mode. But there's still other factors we have to watch. And remember, TLT is both a slow mover and the IV could still move fast and the prices could get crushed really, really quickly. So approach with caution. Then I'm going to watch UVXY. We made some of those free, but UVXY is kind of expensive. And again, as UVXY hits lower levels, it becomes harder to go up in value. So be more cautious on that. If anything, I think you could get cheaper puts on individual companies if you wanted to short the market. And if you wanted to play a bounce, I wouldn't really try to short this. I would just go after, calls on like Microsoft and stuff like that. But watch them, then watch IWM. I'm going to keep my eye on them as far as just a general index. And in the price of the premiums, so you can see, compare this to the SPY. IWM is kind of reflecting the bank and financial stocks, which are still important to watch. But keep your eye on how that plays out. I'm going to start looking for maybe even some crazy puts on there, depending on how this week plays out. If it gets more negative, then Facebook, I like where they're at. Remember, they had bad earnings. They're kind of in this range, so they're trailing behind the overall market. Keep your eye out for them, but those puts did get expensive. Then Palo Alto, we're going to watch in the morning, see if we could do an earnings flip depending on what the market throws at us. Then HD, they've just been killing it. That would have been a great credit spread on Friday, but watch out how they play. I want to check the premiums, but I think it's pricing in a lot, and the fact that it's moved up so much and kind of being steady, it kind of scares me for earnings, because then it may mean that HD might not move a lot, but we will see. Then watch Expedia. They dropped a little bit, and now the contracts we got for earnings, we were up like $800. They came down. They're only up $100 on them now. Thankfully, those are free, but this means the contracts are cheap. They did show a little bit more resiliency that other day, so if they do start to rotate or even get a continuation move and kind of start going back up, that would be good. If they drop, I think that'll just put us into a no man's land. So watch them. Watch Roku, like we said. BYND, that's going to be my bigger earnings play that we're going to be setting up for. Then Apple, I like where they're at now. This is the guidance cut. They're below that now, and they took more of a beating than anything. And I forgot they had another set of news. So watch out for them, though, and just watch them to even gauge the overall health of the market. And then finally, watch AbbVie for the long term. They've been killing it. Shout out the long-term accounts. But watch all the healthcare stocks. I want to see UNH. UNH is still above 301, which is a great sign. But also watch Anthem and Cigna. And now this is why I want to watch them, is to see what they do here. Do they start to rotate out? Bernie Sanders won the Nevada caucus. He's been getting a lot of support. I've been waiting for that Bernie effect to hammer healthcare, so let's see what happens, and let's see if that actually holds some weight tomorrow. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Keep that helmet on. Time to get your head in the game. Control the budget. Remember, we got to keep this money for 2 to 4 weeks. You are not giving the money back, baby. You got to get belief. You got to believe in yourself. You don't have time to focus on negative cycles. I don't care what happened last week, win or lose. It's a new week, baby. So keep your head in the game. Keep it small. And remember, just save up, save up. It doesn't matter. Even if you sit out 1 week, you could always come back again. Let the market come to you. Do not force it, ladies and gentlemen. The code loves you. Keep it positive and respectful, and I'm going to see you in the morning. Let's go.